As a new trader, I underestimated risk management because I didn't know how important it was.
If I come and say I'm willing to risk $1,000 every day, I have to basically work backwards. So you have to figure out how much money you want to risk, how many points. If you have too tight of a stop loss, then you can get stopped out instantly. So you really want to have enough range is what you want.
Stop risking 4% on a trade.
You were loading up $100 and then trying to flip it to the moon and be an altcoin. You got to realize like you're not going to ever have proper risk management.
Have a goal in mind. After I've placed this number of trades, I'm walking away.
Have a max loss for the day. Like for instance, depending on the contract size that I'm trading that day, depends on how much I'm willing to lose. I'm not going to cut into my P&L trading 2 contracts because then I put myself on tilt. And you don't want to put yourself on tilt.
To keep your pips at a minimum of your risk, number one. But I always give a 30 pip minimum, a TP, and a 30 pip minimum stop loss. So that gives fair game to say if you're a one-to-one trader, pick and choose.
Don't over leverage. If you have a trading plan, you don't even have to overthink it.
Also, remember when you do one of these funded accounts, 1% is not 1%, it's 10 because you only have 10% of that account to lose.
I've done all my checklists. I've done all the back work. It's in my zone. I see the candlestick pattern. I can risk more.
A lot of people would tell you to hurry up and quit your 9-to-5 and become a full-time trader. Nursing has afforded me the ability to be a high-risk trader because I got a nursing check coming in every week. I can take whatever kind of risk I want to.
So this is the S&P 500. A lot of the work's done on a 4-hour. We follow ranges and we draw boxes on a 4-hour. When a high breaks, we follow the high and we trail back to the low. Like this is a bullish leg, takes the high. So this is a bullish leg. That was the final bullish leg. B1 means break 1 to the downside. You see price action broke that low. Now, one single low could be a liquidity sweep. So we don't class that as a change of trend. A break 2 is a confirmation of that. So if I draw on, this is the higher high, the higher low, the higher high. The low gets broken once and the low gets broken twice. That's the confirmation to go from what was a bullish market for over 5 months to what is now potentially short term, could be long term, but we follow our mechanical rules, a bearish trend.
I like to do my pre-market data and then I go and cook myself breakfast while I'm waiting for everything to warm up. Then from the daily, I'll go down to the 4-hour. And I mean, I use very basic supply and demand, support and resistance. Then I'll go to the 1-hour and see if I see anything. I'll make a new trend line, just kind of defining. I'll go through and start looking for structural differences like wicks and stuff. Anytime you see candles touching and bouncing off in the area, that's either a support or resistance zone. So I'll put one there, change the color. So I know that this is a sensitive area or area of interest. Anytime I come across an area of interest, I go ahead and close my trade and I re-enter with confirmation.
This market is consolidating. I want to see something get taken out and then I look to go longer. I'm personally bullish on NASDAQ and US 30. So that's my overall higher time frame bias. Even though I'm day trading and I'm scalping and I'm on these lower time frames like the 15 and the 5, I'm still always going to be aware of like where do I think my macro is going? Where do I think my higher time frame is?
Me, I already got my zones marked up from yesterday's highs and lows. So blue lines are daily, green lines are hourly, orange lines are 5 minutes. The different thickness just applies to the different strength of the support and resistance for me. I like shorts at this level right here. I'm going to go in for a short. If you see, I got a pending setup in at 18K, just in case she decides to go up there and touch that again.
I'm just going to mark up yesterday's high and low on gold. Make sure I mark my ranges, consolidation zones, so that I don't get confused. This 4-hour here is just marking up the high and low. On the 1-hour, between the end of yesterday and from the beginning of Asian, London, up until this morning, where gold started its push back up. No matter how small the zone might be, you're just gonna mark it up. 30-minute is gonna fall in line. You see the 30-minute dropping out, coming back in, coming out, coming back in. If I traded the 30-minute, my buy stop was here. Price never returned back to that newly created highs. So the buy side is safe.